A very warm good evening to everyone present here. I am CA Deepika Gurgutia on behalf of WIC. Welcome you all for this session. Today we are here to listen very eminent speakers on auditing standards. As you all know, in the current scenario with the change of legal compliances, the standards are very important to be complied with. So, to begin the session, I would request all of you to join for our ICAI motto.
य एष सुप्तेषु जाग्रति य एष सुप्तेषु जाग्रति कामं 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 कामपुरुषो पुरुषो निर्मिमाणः निर्मिमाणः तदेव शुक्रं तद्ब्रह्मा तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदूनात्यपि कश्चन एतद्द्वैता 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 एतद्द्वैता.
Now, I would request our WIC chairman, CA Manish Gadyaji, to please share his words of wisdom.
Thank you, Deepika. Today's faculty, CA Viren Soni ji, who is going to take us the planning and audit of financial statement. A planning for any work, anything what we are going to do is really very important. And definitely Viren Bhai is going to take us through that. I will not go into detail of the topic because Viren is the right person. But I will just share the few of the initiative what WRC has taken this year. Recently, day before yesterday, we have successfully completed our first ever RRC on cruise, which was attended by more than 160 participants. And we had a great discussion on 4 different topics. So which was really appreciated. Apart from that, as far as industries are concerned, members in industry, we have started a series called CEO Speak, a journey from articleship to CEO. So many chartered accountants who are running a business, and in that chat show, we are showing that how you can become a chairman or CEO of any company. We have also started CFO forum. Apart from that, in WIRC this year, we have come out with 18 different publications. Out of that, one publication is on accounting standard for non-corporate entity relating to auditing standard accounting. Apart from that, we have also started a project called TEL, that is Train, Earn and Learn, where we are giving a training to undergraduate student and teaching them about auditing, teaching them about accounting, GST filing, income tax filing, Excel, and then placing them with the CA firms for 1 year as a training. So any CA firm want to hire such kind of intern can register themselves with the WIRC website. Apart from that, women chartered accountant, also we have started a portal called Khoj, where a woman chartered accountant can register themselves, upload their profile and seek work on assignment basis, full-time basis, or maybe on part-time basis. Apart from that, we have also started WOW series, that is Women on Wednesday, every second Wednesday of the month. You can listen to beautiful and knowledgeable women speaker. I will not take much of your time. So thank you for joining for this program. Over to you, Deepika.
Thank you, sir. It's my privilege to introduce our today's speaker, CA Viren Soni. Viren is a director with BSR and Company LLP, Chartered Accountants Mumbai. Viren has been engaged in audit and assurance domain over more than 16 years. Over his career span, he has worked extensively across industries such as industrial manufacturing, pharmaceuticals, retail, and hospitality sectors. His area of specialization includes statutory audits, group reporting, limited review engagements under SEBI regulations, and reporting on corporate governance. He has led engagement teams and worked on several large listed and unlisted multinational clients, including not-for-profit organizations. He also carries extensive experience on Ind-AS transitions and IFRS group reporting engagement on various multinational audit clients over the past few years. He has performed several roles as part of the quality and efficiency initiatives of the firm, such as coaching, root cause analysis of gaps in documentation. He has been a regular trainer in his existing firm on the topics related to compliance with standards on auditing and developments in financial reporting, and have also contributed actively to various flagship publications for the past several years. With this, I welcome you, sir, on behalf of WIC, and we are looking forward to listen you. Thank you, sir. Welcome.
Thank you, Maniji, for setting the overall context. You covered it very nicely, very comprehensively as well. And thank you so much, Deepika, for such a nice introduction. I hope I am clearly audible, right?
Yes, sir.
Yeah. And good evening, all the participants. Thank you very much for joining on time. Today, the topic which we are going to cover is, of course, one of the critical aspects of the entire audit process, and that is Standalone Auditing 300, which is planning and audit of the financial statements. Okay, very important element. What I will do is over the next 1 hour or so, I have prepared this particular presentation covering the overall aspects of what is the overall auditing and the assurance framework which is currently in effect in India, and certain specific nuances as far as the reporting requirements around this auditing standard is concerned. So here is the agenda of what I am going to cover today. So one is, of course, looking at the overall framework, which what are the auditing and the assurance standards which ICI has so far issued, and where do we stand when we have to specifically talk about SC 300. There are several considerations in relation to establishing the overall audit strategy when you start the audit of any of the engagements. So we will also cover that. We will discuss that in detail. SC 300 also lays down a lot of preliminary engagement activities, and over there also there are broader expectations in terms of what the engagement teams are expected to do. So we will also discuss that well in detail when we move along. This particular standard is covering the overall, there are a lot of aspects pertaining to the planning, and definitely in that sense, since the basic objective of carrying out the audit planning is to make sure that there is adequate compliance with all other auditing standards, definitely in that sense, this particular standard on auditing is very well connected with other auditing standards as well. So we will discuss very briefly what are the requirements of other auditing standards. We will also cover the impact of overall audit strategy on the audit planning. So if you refer to Standalone Auditing 300 along with the additional guidance which is available, in terms of the implementation guide to SA 300. It talks about what is the impact of overall audit strategy on the audit plan. So we will cover as that as well. Very important element, documentation, right? Nothing, if something is not documented, it is assumed to be not done by the engagement teams. So again, the implementation guide to SA 300 talks about several considerations, several requirements in relation to documentation of the overall audit planning and the audit strategy. So we will also discuss that. And last is certain specific considerations in relation to the smaller entities, because the entities which we generally audit, these entities in terms of complexity and the size will be different, varying, right? All the entities are of not of same size or same complexity. So of course there are several additional considerations, certain additional guidance which is being provided in the implementation guide, specifically in relation to the smaller entities. So that is also something which we will cover lastly in a brief manner. So this is broadly the agenda. What we will do is I will discuss each of the aspects of the auditing standards well in detail, and then at the end of the session we will open up for question and answers. So any of the participants, if you have any specific questions, pertaining to any of the situations which you would have encountered on your audit engagements, I'll be glad to answer those. Yeah. So moving on, this slide basically captures the overall, framework of the auditing and assurance standards. While we will discuss the specific nuances of the Standalone Auditing 300, but I thought that let's recap and let's look at what is the broader picture. It is always worthwhile to refresh our knowledge in terms of what is the overall layout of the assurance framework in India. So as you can see on the slide, there are overarching principles which have been enshrined in standard on quality control for any kind of assurance engagement, audit and review of historical financial information, including other assurance and the related services. So this standard on quality control basically, if you recollect, has laid down a number of factors, right? Say for example, any of the firm of chartered accountancy uh, performing this assurance or the auditing engagements, they are expected to have a certain quality of people in terms of experience or the knowledge. What are the firm's policies in terms of documentation of the audit work? What are the policies aspects in terms of consultation? Say, for example, if the audit team encounters certain complex situations on the engagements, right, which earlier they may or may not have experienced, then whom to approach to within the firm. So, requirements around consultations. Again, as far as the specialists are concerned, given the highly complex nature of current business environment, if we were to carry out several audit procedures, we face a lot of challenges, right? So we have to definitely involve the specialist. So what is the entire setup in relation to involvement of specialist? And the last aspect is, of course, in terms of the documentation. So what is the overall infrastructure of the firm to ensure that whatever audit work which the engagement team has carried out, that audit work is adequately documented. There is no platform which is provided by the firm, and the documents are the teams are able to generate audit evidences or the documents, say for example during the course of regulatory inspections. So there are broadly a lot of aspects which have been covered as far as the standard on quality control is concerned, which the firm will have to establish. And another important aspect which I missed out was in relation to establishment of independence, right? So there are a lot of principles, code of conduct. There is a lot of guidance even under the Companies Act also. There are a lot of requirements in order to establish independence of the auditors. So how does the firm establish overall policies, principles to make sure that the engagement teams are independent of the audit clients? So those are the aspects which are getting covered under SQC1. Moving on, if you see the standard on auditing, these are broadly in terms of serial number, ranging from 100 to 899. So under the range 100 to 199, these are the auditing standards which are issued covering certain introductory matters. Auditing standards ranging from 200 to 299. These range covers general principles and the responsibilities of the auditors. Auditing standards range 300 to 499 covers the risk assessment and what is the auditor's response in relation to the assessed risk. So there are several standards which have been issued around the same. Series 500 to 599. This series generally includes auditing standards which have been issued on the topics pertaining to audit evidence. Series 600 and 699. This series basically pertains to all the aspects in relation to using work of others. Series 700 and 799, this is pertaining to audit conclusions and the reporting. And lastly, specialized areas that is covered by SA 800 to 899. So certain audit engagements, where you follow special purpose framework, right? And when the auditor has to carry out the audit under for the special purpose, then of course we have to follow SA 800. So that is basically the series which is applicable over there. So that is broadly on the standard on auditing and how the standards have been split into various categories and the serial numbers. Moving on, if you refer to series 2000 to 2699, this series basically covers standard on review engagements. And if you really see so far, ICI has issued two standards on review engagements. One is standard on review engagement 2400, where the auditors are required to carry out review engagements in a case where they are not the statutory auditors of the company or any entity. And standard on review engagements 2410, which generally mandates statutory auditors of an entity to carry out limited reviews. So especially when it comes to the listed companies and when we carry out limited review engagements on quarter basis, generally if you see the review reports which have been issued, right, under this auditing standard, that is issued under standard on review engagement 2410 on quarterly basis. So that's broadly on the standard on review engagements. As far as series 300, 3000 to 3699 is concerned, these are basically the assurance engagements other than audits or reviews of historical financial information. So this basically covers, for example, when you perform audit of an organization's control as under the service organization related requirements. And the last is the related services which falls under the series 4000 to 4699. So here also when we perform agreed upon procedures, there is a standard on related services which has been issued 4400, which is applicable to such kind of agreed upon procedures engagements. So this is broadly the entire layout of the overall assurance and the auditing standards which have been issued by ICI so far. And depending on the client's requirement, depending on how the circumstances warrant, as auditors we need to make sure that we comply with the applicable and the relevant standard on auditing. For our specific purpose today, of course, our discussion will be broadly centered around the requirement of standard on auditing 300, that is on audit planning. Moving on, when we talk about standalone auditing 300, that is on audit planning, this is one of the fundamental standards in the overall framework, as I discussed earlier. Okay, and this standard basically gives directions to the engagement teams uh, in terms of how to approach a particular audit engagement, irrespective whether it's an audit of a smaller entity or a larger entity, and irrespective of the fact whether it is a limited review engagement or an audit of full-fledged financial statements. So when we look at the overall governing principles of SA 300, it's broadly divided into two parts. Okay, there are two basically sources which mandate compliance on the part of auditors when they carry out the audit. One is of course the standard SA 300 which has been issued, and the second one is implementation guide on the standard. So while the standard lays down the basic requirements in relation to what should be the overall strategy, the overall audit planning of SA 300, but at the same point of time, there is some additional guidance which has been provided as part of the implementation guide to SA 300. Now, the standard, of course, it was issued in the December 2007, and it is applicable for financial reporting periods beginning on or after 1st April 2008. And later on in February 2016, the implementation guide on this particular standard has been issued, which lays down and which provides a lot of additional guidance to the audit teams uh, to make sure that the relevant requirements of SA 300 are implemented, not in form but in spirit as well. So that's broadly the outlay and the requirement of SA 300. Now, if you look at the specifics of the standards, it's broadly divided into two parts. Okay, one is of course establishing the overall audit strategy, and the other aspect is putting this audit strategy into place. That means the audit planning. Now, for any successful audit engagement, what is critical is for the senior team members of an engagement team to establish the effective audit strategy. And if you really see the requirement of the standards, the standard has laid down a number of factors which should be considered by the engagement team upfront in order to be able to effectively carry out the audit engagement. And what you see on this slide are some of the important aspects which I have brought out. So on the left hand side, if you see one of the important considerations as part of audit strategy is financial reporting framework. One of the fundamental and very basic element which the engagement teams will have to definitely factor in when they chart out their overall audit strategy. Right now, under the Indian context, you would recall that currently companies with a net worth of 250 crore or more are required to follow Indian accounting standards, that is Ind AS, which have been notified under Section 133 of the Companies Act, right? So those kind of entities plus their parent companies or the subsidiary companies, we will be mandated to follow Ind AS framework, and the other types of companies are currently following accounting standards, right? So very important element at the beginning of the engagement, the engagement team will have to get complete understanding in terms of what is the financial reporting framework which is followed by the entity, right? Practically, it may so happen that during the course of audit, when you start the audit, the current year which is subject to audit may be the first year of transition from accounting standard to Ind AS, and over there the exercise might be very complex because there is a complete shift in terms of the overall financial reporting framework. So engagement teams then will have to definitely maybe deploy additional competent resources. They will have to also plan full compliance of the requirements of the relevant Ind AS when there is a transition from accounting standard to Ind AS. So there are a number of considerations which are associated with this. The second aspect on the left hand side is industry specific reporting requirements. So when you initially establish the overall audit strategy, definitely you need to consider whether it is an audit of say for example a company which is into BSFI sector, right? A company which is into the pharmaceutical sector or a general manufacturing company. What are the industry specific reporting requirements which are applicable? Generally, under the Companies Act, there are very limited industry-specific reporting requirements which feature in the financial statements themselves. But if you talk about a bank or an insurance company, there will be a lot of additional compliances which will be required to be factored in. So of course, teams will have to also give due considerations to the industry-specific reporting requirements. The third point is consideration of audit evidence obtained in the previous year audit, including several aspects of internal financial controls. So again, in a continuing kind of situation where the engagement teams perform audits year on year, they will have to give due regard to the findings of the previous year as well. And as part of our audit process, when we conclude the audit, there are several matters of significance which we go and then discuss with the management and those charged with governance. Right? Management takes several actions in the year itself, and there are certain things which management may have promised us to action in the subsequent financial year. So when you really start the audit of the subsequent financial year, what is essential on the part of the engagement team is to then go back and then reflect that which were the open points of the previous year, which were the points which were to be actioned in the current financial year, and to really check with them whether those points have been actioned or not. And practically, if you see, those points basically pertain to a lot of aspects around internal financial controls, right? And as part of our audits, normally we issue something called management letter, where we highlight certain kind of deficiencies to the management. These are not really the material weaknesses or the significant deficiencies which will impact your audit opinion, but these are basically the kind of improvement areas which we discuss with them, and then we request the management to take action subsequently. So yeah, in that context, this is one of the fundamental aspects to consider. Interim audit or final audit. Again, very important. If the entity is very complex, definitely you will plan an interim audit. You will draw your conclusions during the interim audit, and then whatever are the observations, those will be taken care of during the course of final audit, right? In certain situations, say for example, where the entity is listed, generally what we see is that the timelines are very stringent. Okay, maybe management laid out timelines or timelines laid down in the regulations. So depending on these kind of circumstances, the overall audit strategy has to be established in terms of how much ground to cover when you do the interim audit, and what is to be done when it comes to the final phase of the audit. Availability of client personnel and data, again very important element, because client is also an equal stakeholder into the entire process, right? Auditing is a two-way process. It is not that the auditors will want to do the audit and they will be able to carry out the audit on their own. So definitely clients are also equal stakeholders. They will have to also shake hands with us, agree on our overall audit planning and the strategy, and at certain points of times it may happen that the client personnel may or may not be available. So very important that we will have to take concurrence from the management in terms of the exact point of time where they will be able to share with us the information, who are the people who will be available for the necessary coordination, and then this is that we will have to plan our audit strategy. What happens is that, of course, auditing is a very iterative process in that sense, right? So when you start the audit, of course, you will carry out several interviews of the client personnel, across various functions, various areas. You will take the understanding of what are the key changes which have taken place during the course of current financial year, right? Broadly at the entity level, at the management level, at the operation level, and at the ground, each of the financial statements level as well. So performing inquiries with client is very critical, and that is why very essential, very important aspect that client also shows that readiness, and accordingly we will be able to do the planning. On the right hand side, multi-location audit and business segments. Multi-location audit assumes importance in a case where, say for example, there is a company which has multiple branches, multiple manufacturing facilities. Okay, this will definitely have a huge bearing in terms of audit strategy. I have been recently doing an audit of one company which is in the hospitality industry, and over there the kind of setup which they have is completely decentralized, right? And the client generally requests us to carry out the audit of individual trial balances at each of the locations. So definitely, when the controls, the entity level controls are common, the processes, policies, everything is common, right? Only people performing certain control activities at the ground level are different. Generally, basis these guidance, we tag such kind of audits as multi-location audit, under which the controls operating at one location are expected to be effective at another location as well. So basis our judgment, what we do is we select certain locations, we do the walkthroughs and the control testing, and basis that we conclude on the operating effectiveness for the company as a whole, right? So again, very important, whether the client is multi-location or not. One legal company or an entity may also have multiple business segments, right? Say for example, one is real estate business, one is manufacturing business, within one entity only. One segment may be pertaining to purely providing some kind of services to other group companies within the group. So of course, at the ground level, when you carry out the audit in a detailed manner, you will not, you will not apply all the audit procedures homogeneously across all the segments, right? So the nature, timing, and extent of the audit procedures has to be particularly tailored for each kind of business segments. So that is why multi-location audit and business segment assumes key importance. Developing understanding about internal audit, uh, again very critical aspect. This is one of the due considerations when it comes to reporting under internal financial controls. So say for example, if IFC reporting is applicable to an entity, right? Over there, then we will have to really gain deeper understanding in terms of what is the overall control environment of an entity, and over there internal audit is one of the critical aspects. What is the competence of the people, what is the overall composition of the internal audit department, what is the scope of internal audit, what were the observations which were noticed in the previous year, what is the overall reporting mechanism, the frequency, so on and so forth. So of course, those are the considerations which need to be taken into account when you look at the internal audit aspect as part of our overall audit strategy. Moving on, it may so happen that some of the controls, some of the activities of an entity are outsourced, right? So over there also we have to really evaluate whether the requirements of SA 402, which is on service organization, are really applicable or not. So some of the control activities of an entity are being performed by a third party, right? Say for example, the common example which we see is outsourcing of the payroll function, where the entity really wants to focus on their core activities, and computation, salary processing related activities are outsourced to a third party, which is again an expert in this particular area. So when there is an involvement of a service organization, there is a standalone auditing, and there are several considerations which are required to be applied over there. So if this is the case, auditor will have to perform the necessary procedures, identify which are those areas, and then uh, plan the audit procedures for such kind of financial statement areas. So again, very critical aspect. The last point on the slide is impact of information technology. This is one of the most important and one of the most, I would say, complex areas when it comes to formulate the overall audit strategy. So again, it will depend on what is the level of penetration of technology as far as the entity is concerned, and depending on that, the auditors will have to design the nature, timing, and extent of the audit procedures. There might be certain entities, say for example, a simple cost plus markup kind of an entity, or a simple trading entity, where the dependence on the overall information technology may not be that high, right? But there may be several companies, several entities where the dependence of the information which is being processed through information technology may be very high. Say, for example, an e-commerce company or any entity, bank, operating in banking space, uh, anything. So auditors then will have to consider uh, what is the extent of the reliance which management places on the information produced, processed through information technology related tools, and then evaluate the financial reporting implications and design the audit procedures. So these are broadly the aspects as far as the overall audit strategy is concerned. There are several other examples as well, but I thought to pick up certain key aspects of the audit strategy. So these are the points which I got covered and I discussed with you. Now moving on, having discussed the broader picture about the audit planning, the next and again very critical factor is to perform several preliminary engagement activities, because before you really start the execution of the audit, right, you have to look at several aspects. And broadly, if you see, the auditing standards uh, really mandate us to perform a risk-based auditing instead of performing the audit across all the financial statements area, right? So we don't do that. We do the overall risk assessment. We identify which are the key risks which have been identified, and accordingly we design our audit procedures. So of course, we need to perform several preliminary activities as part of our overall audit planning. Uh, there are several factors which have been discussed in the auditing standards. These factors, for the sake of convenience, what I have done is I have bucketed them into three segments. One is certain aspects pertaining to risk and planning considerations. Certain aspects pertaining to other qualitative aspects which the auditors need to consider before they begin their audit. And there are a lot of other administrative aspects also which are required to be addressed before the execution work starts. So coming to risk and several planning considerations, one of the very important aspect is to make sure that the auditors have performed initial risk assessment activities and identification of risk of material misstatements, right? So this is broadly divided into several parts as part of the overall policies and the risk assessment framework of a firm. As I discussed earlier under standard on quality control, there are several criteria which are applied when it comes to acceptance of the client, right? So those are the procedures which are required to be performed in terms of several background checks of the client, of the management, the key managerial personnel, and the shareholders. Once you perform that, Then there are several other initial risk assessment activities which are undertaken. So we definitely look at the minutes of board of directors and minutes of other meetings. We meet the management, seek key updates for the current year, so on and so forth. And once we perform these kind of procedures, we identify which are the areas which have risk of material misstatement, right? So which are the areas which would have, you know, a reasonable likelihood of material misstatement. We have to identify those areas and then design our audit procedures. The second point is we need to also plan the entire audit approach on areas where significant risk of error or risk of frauds have been identified. Now, there is a separate standard on auditing in performing risk assessment procedures, but broadly, when it comes to the risk, it is divided into two parts. There can be a significant risk of error or a significant risk of fraud. And when we say significant risk means a likelihood of a material misstatement into any particular financial statement area. Okay, which is material when you look at it from the overall financial statements point of view. So when you identify several areas of significant risk of error or fraud, then you have to definitely plan your audit approach. And under the auditing standards, uh, fraud risk, uh, the significant risk of fraud is associated with revenue by default, right? And as per the auditing, there can be an overall uh, understatement or overstatement as well when it comes to the fraud risk pertaining to revenue. So auditors will have to definitely design the audit procedures and then make sure that the risk which has been identified is addressed adequately. Likewise, if there is a significant risk which has been identified, say for example, the entity has huge borrowings, right, and it is required to comply with the debt covenants. Now, for the purpose of debt covenants, if there are complex estimates which are involved in terms of valuation of properties because of the consideration of market valuation, so on and so forth, then in that situation, borrowings can also be identified as an area where it can have significant risk of error. The other point is results of previous audits that involve evaluating and operating effectiveness of internal control, including the nature of identified deficiencies and the action taken to address them. This is the particular aspect which I covered when I was talking about consideration of previous year's audit in a kind of a situation where uh, the audit is a continuing exercise year on year. So definitely we have to consider those aspects and then see the impact in the current year. So these are several aspects in terms of overall risk and planning considerations. The other qualitative factors, of course, definitely include determination of the materiality as per SA 320. So unless and until you establish the materiality, the audit team will not be able to select the samples and start the execution, right? So materiality is one of the fundamental elements of the overall audit planning. Unless and until you establish the materiality, you will not be able to do the scoping as well, right? Because as I said earlier, broadly, the auditing which is expected is a risk-based auditing. So when you determine the materiality, we do the scoping, we identify which are the areas which are significant, and then accordingly, we design our audit procedures. Volume of business transactions again assumes significant importance. If it is voluminous, you may determine to do testing of controls first and then design your substantive procedures. And depending on the kind of outcome of control testing, you will decide on the extent of substantive testing. So volume of business transaction also is a critical aspect. Group reporting engagements, by nature, these kind of engagements are different, and there are specific aspects which have been covered under SA 600 when it comes to the group reporting and relying on the work of other auditors. So generally, say for example, if you are auditing the larger, more complex clients which has subsidiary companies, JVs and associates, and if then uh, these entities are also spread across, various geographies, then definitely as group engagement team, you need to comply with the requirements of SC 600. So you'll have to plan it thoroughly, identify the components which are required to be scoped in or scoped out. You need to specify the kind of audit procedures which are required to be performed by the component auditors, and then you need to also allocate the materialities to each of the components. So depending on what are the specific guidelines which the firms have implemented, the teams will have to ensure that there is adequate compliance with SC 600. So when it comes to the overall consolidation related activities, group reporting, the auditors will have to give due regards to those aspects during the course of planning as well. That is the context here. The second point is significant changes in the financial reporting framework. This aspect I touched upon earlier, but of course, if there are significant changes, or if there is a new accounting standard which has been notified during the course of the year, then definitely the engagement teams will have to consider the impact of changes in this financial reporting framework while formulating the overall audit strategy. And over the last couple of years, if you really see, India's 116, that is on lease accounting, India's 115, that is on accounting of revenue, contracts with customers. These are the couple of standards which have been issued, right, recently. And there have been several changes in India's 116 as well, whereas certain relaxations arising out of COVID-19 related restrictions have also been incorporated. So there is an exemption which has been given to entities from lease modification accounting. So whenever there are new standards which have been notified, or there are changes in the existing accounting standards, definitely what will be the impact of those changes, how the changes are required to be accounted for, whether the comparatives will be restated or not, so on and so forth. Those aspects are required to be considered when there are changes. Changes in laws and regulations, again certain kind of entities which are highly regulated, and during the year when there are any changes in laws and regulations, or the changes which have been notified earlier but are effective from current year onwards, the audit teams will have to give due regard to those points as well. The last point on other qualitative aspects related bucket is significant business developments impacting the entity, including the changes in information technology, business processes, or changes in key management, and acquisitions and mergers and divestments, so on and so forth. So yeah, all the operational changes are required to be factored into when you plan the audit. And if there are any new developments which have taken place during the course of the financial year which is subject to audit, then definitely the kind of audit procedures which we design will also undergo changes. Say for example, the client has implemented a new ERP, right? So we will have to definitely involve our specialist, and then we will have to check the transition of information from the old ERP to the new ERP. Similarly, if there is a business acquisition, or there is a merger which has occurred during the course of current year, then of course due considerations will have to be given to that as well. Normally on mergers and acquisitions, companies prepare the schemes and file in NCLT, right? And NCLT also takes some amount of time before the approval is given, and then the approved copies of the scheme are filed with ROC. So if these activities have taken place during the year, depending on whether it's a business combination or common control accounting, uh, since it impacts financial reporting, auditors will have to factor this in their planning at the beginning stage. Lastly, on the top right hand side, there are several administrative aspects as well which the engagement teams will have to consider. for the purpose of being able to effectively carry out the audit. And while you will definitely consider several technicalities in terms of the requirements of various auditing standards, but of course, these are the administrative aspects which are also equally important and then cannot be overlooked. One of the important aspect is deployment of resources for specific audit areas. So when you initially plan the audit, of course, the engagement teams will have to make sure that there are competent, experienced, technically knowledgeable people who are forming part of the team. Each of the team member has been allocated areas depending on their level of experience, expertise, and the knowledge. And then of course the entire work as and when completed is also subject to overall supervision and the review. So there are several aspects which are required to be considered with respect to this. The amount of resources which are also allocated to specific audit areas, such as the number of team members assigned to observe inventory count, right, at multiple locations, the extent of review of other auditors' work. Because as I said earlier, if it's an audit of a large multinational company which has several subsidiaries, joint ventures, and associates, then of course the auditors at one level will have to also get involved into the audits being carried out by components as well. So who are the team members who will have the responsibility of that oversight and continuous review of other auditors' work? That has to be identified upfront. And the audit budgeted hours and what is the time which is allocated for each of the areas. The other important aspect is what are as far as the timelines are concerned, exactly at what point of time the audit will be carried out. So whether the audit will be carried out during the course of interim stage or at the towards the end of the engagement, how much time will be spent during the course of interim audit, what are the areas which are required to be covered during the course of interim audit. There are a lot of other aspects which are required to be covered, and this needs to be clearly articulated and clarified to the teams as well. So the team will have proper direction and then they will be able to perform the audit. Last point, which is administrative, but again, very, very important, is in connection with the review of the entire audit work. And review is something which does not happen at a point in time, but review is something which should happen over a period of time, gradually, as and when needed, right? So of course the timetable of review needs to be also clearly charted out at the beginning of the audit planning. Who will review how much, and as per the requirements of quality control standards as well, the engagement partner is also required to be involved, especially under the areas where there is significant risk of error or significant risk of fraud which has been identified, right? Including the areas of management override of controls. So of course the audit partners, the senior managers or the managers, senior team members, the review related work and all those schedules have to be agreed upfront. If there is a separate engagement quality control partner who is part of the engagement team, then the teams will have to also ensure that his time is also blocked well in advance so that the reviews could be planned and reviews actually do take place well on time. So these are broadly several activities when it comes to performing preliminary engagement activities as part of the overall audit plan. Yes, but what is important is that the engagement teams need to design a very holistic and robust audit planning strategy at the commencement of the audit in order to make sure that the audit is carried out in compliance with the standalone auditing. Moving on, as I said earlier, that audit planning is something which does not work in isolation, right? And if you really see the implementation guide to SA 300, it has also clearly laid down that this particular auditing standard works along with a lot of other auditing standards which have been notified under the standards on auditing under the Companies Act. So if you see on the left hand side, uh, uh, there is SA 200, which is on the overall objectives of the independent auditor and the conduct of an audit in accordance with the standard on auditing. So the point here is that when you formulate the overall audit plan, of course, due consideration will have to be given to the requirements of SA 200. And SA 200 basically mandates that yes, the auditing has to be carried out in requirements of the respective auditing standards. The auditors need to be independent. Auditors need to exercise uh, professional skepticism when they apply the audit procedures, and auditors also need to apply judgment across various areas as and when circumstances warrant. So there is a lot of guidance which is given in SA 200, which is required to be factored in at the time when you formulate your audit plan. The second point is SA 330, which is auditor's responses to the assessed risk. This point we covered earlier, but the essence here, the messaging here is that if there are several significant risks which have been identified, say as part of our previous year audit or as part of the risk assessment during the course of risk assessment phase, then the engagement team has to be very clear what will be the response to those assessed risks, right? So what are the incremental audit procedures which are required to be performed to address this increased risk, whether in terms of identification of anti-fraud controls or performing substantive audit procedures. 501, it talks about audit evidence, specific considerations for selected items. So again, this touches upon the requirements in relation to physical verification of inventory. Auditors will have to then upfront plan that for the current year, what should be the strategy in terms of physical verification of inventory. For example, if there are multiple locations, teams may choose to uh, uh, teams may decide to choose several locations in the current year, and several locations may have been selected in the last year, or several locations can also be selected in the next auditing cycle based on their judgment. So there are a number of considerations when it comes to SA 501, which are again required to be upfront agreed with the engagement partner. So that is why when it comes to the audit planning, the standard assumes an importance in that sense. External confirmations, again, these auditing standards lays down various requirements in terms of confirmations. When we roll out confirmations, we generally identify areas such as, for example, trade receivables, trade payables, advances given or advances taken, related party confirmations, so on and so forth, right? And normally, under the auditing standard, we follow the sampling method. So we don't roll out the confirmations to all the parties. But very, very important, the engagement team can reflect upon their experience of previous year's audit. Okay, how much is the response which is obtained by the engagement team when they roll out confirmations, and what happens if the confirmations are not received in entirety. So what is important here is that teams need to be given due directions to say that what are the alternative procedures which are required to be performed in case of external confirmations. This is again to be laid out well in advance during the course of planning also. The second point is in respect of accounting estimates. This is again a very complex area to audit, especially given the fact that if there are multiple areas of accounting estimates which have been identified by the engagement team, then they need to decide whether to involve specialists here or not, and how to test and how to do the retrospective review of key assumptions which are applied in accounting estimates, right? Here there is a management bias which is being tested directly. So yes, the audit strategy in relation to 540, SA 540 has to be laid down on day one. Going concern is one of the important elements which has assumed significance over the last couple of years, especially when there are a lot of sectors which have borne the brunt of the physical restrictions which have been laid down by various governments. So if the entity, because of decline in revenue, has faced challenges in terms of going concern, then due considerations will have to be also given to Standalone Auditing 570. This is again, teams need to be guided properly what is to be done, and proper audit strategy has to be also formulated, including communication to the client. Using the work of an auditor's expert, again, how many experts you will involve, what is the requirement, roles and responsibilities has to be agreed upfront. Using the work of another auditor, we discussed it earlier. Audit considerations in relation to an entity using the service organization, again we discussed it earlier, but yeah, the audit teams will have to identify that which are the areas where there is an involvement of service organization, and auditors will have to definitely discuss this with the management. They will have to test user entity complementary controls in addition to asking for service auditors report. So there are a whole lot of procedures which are required to be performed. These procedures also will be laid down and planned well in advance, so that the team will have proper direction in that sense. Moving on, communication with those charged with governance. I am on the right hand side at the bottom. So again, this is one of the important auditing standards. This communication is not going to be a one-time communication, right? So when you finalize your audit strategy, it is required to be communicated with the management, and this standard lays down that what are the elements which are required to be communicated. So very, very important element, because when we carry out the audit, the client also has to be on the same page, right? They need to also understand that what is going to be our audit strategy, what are the significant areas of risk which we have identified, what are the areas of estimates which we have identified, and what is the work which is being planned, including the overall outlay of testing under IFCs. So yes, we need to get the buy-in of the management, and then the aspects relating to SA 260 plays a very important role. The final aspects, conclusions are also required to be communicated to the management. So when it comes to the auditing listed entity, you know the dates, you know the schedule, and it happens like that. So over there are no challenges. But when it comes to auditing non-listed companies, over there we face majority of challenges, right? So yes, these aspects are also required to be planned well in advance, so that the requirements of SA 260 are also complied with. Materiality, we discussed it earlier, but yes, materiality from scoping perspective, evaluation of misstatement, whether material or not, materiality plays a very important role. And we look at a number of aspects of materiality when we finalize our audit plan. One of the important aspect is that during the course of the entire audit team needs to be vigilant about the audit misstatements. And if there are audit misstatements which have been identified, which really lead to restatement and material changes in the identified benchmark basis which the materiality has been calculated, then of course the materiality will have to be revised, and the entire nature, timing and extent of the audit procedures will have to be also revised in that sense. Identifying and assessing risk of material misstatement we discussed earlier. Audit documentation, again very critical. Auditors will have to make sure that all the aspects of audit planning are getting captured in the audit documentation. Agreeing the terms of audit engagement, again one of the important aspects from risk audit risk point of view. Before you start your auditing, you need to make sure that there is a signed engagement letter which is in place, which has been countersigned by management as well, and this engagement letter will lay down the roles and responsibilities of the auditors, management, audit committee, so on and so forth. And lastly, on the top right hand side, auditors will have to also give due consideration of laws and regulations in an audit of financial statements. So there are several considerations when it comes to other key auditing standards, which are also important, which are required to be considered upfront. Now, if you look at the requirements of and the guidance which has been given in the implementation guide to SE 300, it has what it has done is it has really mapped several considerations considerations of audit strategy to the audit plan. Okay, so say for example, we discussed financial reporting framework, right? So that is an element of an audit strategy. But when it comes to the audit plan, as I discussed earlier, the auditor will have to give due consideration to the fact whether appropriate team members with the requisite technical expertise have been deployed or not, right? So auditors then will have to look at the experience, technical knowledge of the resources, and then accordingly deploy on the audit assignments. So that is the effect on the audit plan. Need for statutory audit. It may so happen that certain entities may not be subject to statutory audits. Certain entities may be subject to statutory audits, uh, whether within India or outside. Say, for example, certain entities which are key components of a parent company based out of India. So, of course, when the audit teams do the planning, the audit plan will have to be also prepared in accordance with the scope of engagement in relation to the local regulations. For example, under the Companies Act, what are going to be the requirements of statutory audit, right? The statutory auditors are to opine on certain matters covered under Section 143. There are a lot of things which have been mandated. So, of course, over there, the auditors will have to cover these and intervene when they design their audit procedures. The expected audit coverage, this is again very critical. If you are performing interim audit, what is it that you are covering in the interim audit? If you are performing the final audit, what is being left out to the final audit, which will be covered towards the end of the year? When you carry out the audit of large corporation having several listed, several joint ventures, associates or subsidiary companies, what is going to be the coverage over there? Those aspects are also very critical. If you recollect, under SEBI regulations also in May 2019, it has been mandated to the auditors of listed companies that 80% of the components need to be either reviewed or audited by the respective auditing teams. So those are the aspects which are required to be covered over there. The coordination of with the other auditors. If say for example under the group reporting engagement, if the auditor wants to place reliance on the work which has been performed by other auditors, or say for example an audit of a listed entity, right? We carry out limited reviews on quarterly basis. So if there is any reliance which is to be placed for the review procedures which have been performed during the course of the year, and then what are the additional audit procedures which will be performed to supplement the audit work performed up to the date of interim financial statements. So these are also the considerations which are required to be factored in while finalizing the audit strategy and the audit plan. Industry specific reporting requirements, we discussed it earlier, but again this will depend on under in which sector the entity operates and what are the kind of specific additional requirements. These requirements then will form part of, say for example, the annual report of the company, and as part of uh, looking at the consistency of other information which we have to definitely review under SA 720, we will have to also consider that what is this additional information which is being disclosed in the financial statements or the annual report. The nature of the business segments to be audited. Here also, based on the requirements, the auditor may plan to use a specialist with an appropriate expertise to provide the inputs on the matters pertaining to the segments, right? So say for example, one of the segments pertaining to real estate operations, and over there, if the questions pertaining to impairment of inventory or impairment of property, plant and equipment or investment property comes into picture, then definitely over there, auditors will have to involve the specialist to examine the reasonableness of the assumptions and the projections which the management has applied. So depending on the circumstances, this may vary from entity to entity. Moving on, looking at the involvement of the information technology very critical, and invariably across all the engagements, auditing engagements which we perform today, uh, there is a good level of penetration of IT in one or the other way, right? So auditors will have to definitely perform a number of audit procedures. Of course, the core responsibility is that of the engagement partner, but he can take help of a specialist and perform several planning procedures in order to identify what is the level of reliance which the management places when it comes to IT application controls as well as the general controls. So what you see on the slide are several bullet points which have been provided as indicative guidance in the implementation guide. First is, of course, in terms of identification of specific databases of the applications. Uh, Several clients may be using a simple ERP for the purpose of, say, for example, running their operations or for the purpose of financial reporting. There may be several clients where there are multiple applications which are used, right? And those applications may be interfaced with financial reporting package. So auditors then will have to decide that what is the importance, significance, relevance of these applications, and whether to be covered in the audit procedures or not. Defining the specific test to be performed together with output requirements. So what are the kind of tests which will be performed? Arranging for audit with appropriate skills and coordination with the entity staff. So of course, when it comes to performing the audit procedure or taking the understanding, the interaction will be more with say for example the IT folks of the company, right? So over there also the auditors then will have to decide that which are these people, conducting necessary inquiries with them, gaining the understanding assumes very critical role over there. And then whatever information which is being provided relied upon by the management, whether that is matching with the accounting records or not, and what are the methods of evaluating the results and audit conclusions. So when IT is critical, broadly we perform two kinds of test. One is of course general IT control testing, which covers say for example several IT policies of the company, access rights, computer operations, right, change management, so on and so forth. And when we identify application controls, uh, we need to also see whether these application controls are being relied on by management as well. And if that is the case, then with the use of our specialist, we test application controls as well. And of course, depending on the outcome of the overall IT procedures, since it will impact manual controls and the substantive testing, it is highly imperative that what is going to be the scoping of the entire IT work is planned upfront with the high involvement of the engagement partner and the IT specialist. Several other considerations, entities timetable of reporting. Again, this is critical because for listed entities, they may be doing the reporting on quarterly basis. They may be closing their books on quarterly basis. So auditors do carry out a number of limited review or the audit procedures on quarterly basis, and then accordingly they need to decide to what extent these procedures will impact the year-end audit procedures. Volume and nature of transactions. Uh, this is again critical. If the volume of transactions is very high, then auditors may decide to carry out test of controls, right? And depending on the outcome of test of controls, they may decide the extent of substantive testing. So going by the thumb rule, if control testing is relied upon and if the controls are effective, then the level of substantive testing will be lower. And if the controls are ineffective, or if say for example the volume is very limited, then in that situation the auditors may decide to straight away do substantive testing and not control testing. Basically in the Indian context, control testing is mandated because of the responsibility to issue the IFC opinion. If there are significant changes in the financial reporting framework, then of course the audit plan will have to be designed to ensure that the all the implications of financial reporting changes are really factored into. We discussed this aspect well in detail earlier, so I am not delving much into that. Changes in legal environment affecting the entity. Again, so if during the course of the financial year, say for example, there are changes in the taxation laws, right, which will impact the determination of the current tax liabilities of the company, then auditors will have to give due regard to that, and it may be quite helpful to involve the tax specialist at an early stage while conducting necessary inquiries and discussions with the management, and to upfront share with the management our auditing requirements, so that we are able to audit the entire impact of changes in these regulations during the course of our audit procedures. So again, very important element. Results of previous audits that involved evaluating the operating effectiveness of internal control. Again, we discussed this earlier. If there are several observations in the past which have been observed, then yes, we need to consider at the beginning whether these changes have been implemented during the course of the current year or not. And if so, then accordingly, the engagement teams will have to also plan the additional audit procedures because of those kind of changes. The selection of the engagement team, this has to do with the nature, extent, and timing of the kind of direction, supervision, and review which will be provided to the entire engagement team. So of course, the schedule of all the reviews and everything with the engagement team has to be agreed upfront as part of the audit planning. And engagement budgeting is also very important aspect while administrative in nature, but definitely the engagement team will look to achieve efficiency in the entire process, right? So of course, the overall budgeting will be carried out, how much time which will be spent on the engagement, and some of the team members will have to also continuously monitor what is the actual time which is spent as compared to what is the time which was budgeted. So yeah, so those were several examples of the impact of audit strategy on the audit planning. Now moving on, documentation is also one of the key aspects which has been covered by the implementation guide on SA 300. Okay, and it is highly imperative that the engagement teams document what are the elements of audit strategy, and in order to implement the audit strategy, what are various aspects of audit plan. So uh, documentation, of course, will also serve the purpose if the engagement teams at a later stage want to refer back to what was planned at the earlier stage, at the stage of beginning of the audit, then of course documentation will help over there. So there are several considerations when it comes to audit documentation. First thing is that documentation of the overall audit strategy. The overall audit strategy is a broader framework, which is required to be followed under the given circumstances for any particular client, right? And that can be documented in the form of, say, for example, a memorandum, which will lay down key decisions, for example, the overall scope, timing, conduct of audit, the framework, so on and so forth. All those elements of audit strategy which we discussed earlier, right? Different firms may have designed different ways of documentation of audit strategy. You may follow a simple memorandum, which is illustrated in Appendix 2 to the implementation guide. You can refer to that. Certain firms may take help of electronic file documentation. Over there also, all the aspects of audit strategy can be documented. Similarly, the audit planning also is required to be clearly articulated in the audit documentation, right? So when it comes to the audit planning, this covers the planned nature, timing, and extent of risk assessment procedures, further audit procedures at the assessment level, which are required to be performed. So we identify significant accounts. We identify which are the relevant assertions for those significant accounts. We also identify which are the significant risks which have been associated with significant accounts, and which are the areas where there are estimates which are involved, right? So here also, when it comes to documentation of the audit plan, there is an example which has been given in Appendix 4 to the implementation guide. You can refer to that. Audit documentation of the audit plan also serves as a record for proper planning of the audit procedures. So the engagement teams are required to lay down in detail what are the audit procedures which will be performed for each of the financial statement captions. That will also give them enough directions in terms of what work which is required to be performed at a later stage, right? So all the aspects of audit planning, when to perform inquiries with the management, whether there is a service organization or not, if the service organization, what are the audit procedures to be performed, how, when, to what extent we will look at minutes of various meetings, preliminary analytical procedures. There are a number of aspects concerning the audit planning. These are required to be detailed, articulated in a detailed manner, so that the team will have clear idea, and then those will be documented as part of the overall audit planning. One of the important aspect is that this is an iterative process, and that process has to be kept alive, right? So during the course of your audit process, if you come to know any significant development or any kind of significant piece of information which the engagement team believes will have bearing on the audit strategy or the audit plan, then definitely that documentation should capture that, and accordingly the nature, timing, and extent of the audit procedures are required to be revisited. So again, it has to be kept live. All the changes are required to be incorporated and need to be captured in the audit documentation. The last point, as far as this auditing standard is concerned, is in relation to several considerations when it comes to auditing the smaller entities. Now here, when we say the smaller entities, actually in the standard it is not defined, but one can really assume that uh, the volume of business transactions is very limited. The nature of transactions are also uh, very less complex, and the audit engagement teams which are involved are, say for example, the engagement partner and say one of the supporting team members, right? So there are several considerations which have been captured in the implementation guide. So over there also, the level of documentation which will be required will also be very limited, right? So establishing the overall audit strategy for audit of a small client doesn't need to be so much complex, comprehensive the way we discussed over the last several slides. The audit strategy over there also will be different, considering the nature of the entity and the complexity of the transactions. Maybe the closing meeting which the audit partner would have done in the last year can serve as the audit planning memorandum. We can then define the strategy in a piece of paper for the current year as well, and then the question of really direction and the supervision of multiple team members may not come into play because of the fact that the engagement partner himself may be carrying out several audit procedures himself, and several non-complex areas may be performed by the other junior team member, and the partner himself, since he is involved throughout the audit process, the entire coordination, communication, documentation may not really be a challenge. So depending on these requirements, of course, the audit partner will have to capture these in the documentation. So broadly, these were the aspects which were captured under the head consideration specific to smaller entities under the implementation guide. So this will really vary, and it will really depend on the nature and the size of the entity. So this was the last topic which I wanted to cover. That's it from my end. If there are any questions, any of the clarifications which are required, I am glad to provide those. I have tried to, comprehensively cover all the requirements of the auditing standards, including the practical examples. But if there is anything which I should cover more, or if there are any questions, I am happy to answer.
Members can type the question and ask any question.
मेरी क्वेश्चन नहीं है मैडम.
What is the problem and what is judgment?
विरेन सर एक भी क्वेश्चन नहीं है सर अभी तक.
Interestingly, let me also, before taking you through the provisions.
Okay. So,
Sure.
Thank you so much, sir, for your precious time. As we all know, we have already read all of the standards in our syllabus, but I'm very sure majority of us have forgotten it, or either we have forgotten to apply it as much as we should do, with very small integrities and remembering all the points. So I, on behalf of everyone, thank you so much for your precious time and refreshing us with all the points and its importance. Thank you, sir.
Thank you very much for the opportunity. Thank you so much.
Thank you, sir. We welcome the presence of CA Sandeep Shah, our next faculty. Welcome, sir.
Thank you, Viren, for taking the earlier session.
Most welcome, Sandeep.
Thank you.
So we'll be moving ahead with our next session. So our next session on another audit standard. I take this opportunity to introduce our faculty, CA Sandeep Shah. CA Sandeep Shah is a chartered accountant and managing partner of NH Shah Associates LLP. He has over 37 years of experience encompassing the provisions of assurance and corporate services to diverse range of industries. He is engaged with Institute of Chartered Accountants of India in several capacities as member of Shield Panel formed by Research Committee for ICAI Awards for Excellence in Financial Reporting. Co-opted member in AS Implementation Committee. Panel of Technical Reviewer formed by FRRB. In past, he has been associated as member of ICAI's Expert Advisory Committee, Accounting Standard Board, Auditing and Assurance Standard Board, in AS Technical Felicitation Group, ITFG, and many other groups for guidance note. He is also committee member of Bombay Chartered Accountants Society, Accounting and Auditing, and Corporate and Life Laws. He is currently on the executive boards of non-for-profit organizations like National Burn Center, Somya Education Trust, Rotary, etc. A voracious reader by nature, and his hobbies includes gardening. Welcome you, sir. We are eager to hear you and increase our knowledge.
Thank you, Deepika, for the introduction, and thank you, WRCA and Chairman Manish Gadia, for this opportunity. Is my voice audible?
Yes, sir.
Thank you. So what I have for in the next hour and 15 minutes is the topic on the auditor's responsibility relating to fraud in an audit of financial statement, and that's a topic given to me, and the very nature of the word fraud is something which sends shivers to all chartered accountants and practicing chartered accountants for sure. And the aim in this session is not to reproduce what the standard is about. Maybe some of the available public information in terms of the disclosures and some of the thoughts which I have surrounding the onerous responsibility which we have. And with this opening comments, good evening to all the professional colleagues who are attending this seminar on a Friday evening at 7 o'clock, and which definitely means that in the season where December is also a kind of a deadline on our shoulder, I'm sure the WRC always manages to say the show must not stop, irrespective of deadlines. The learning must continue, and so I applaud this thought process of the WRC in this initiative, and happy to be back here again. Deepika, you'll have to just help me whether is the full screen visible?
Yes, sir, it's visible.
Full screen, right?
You have to do it. Sure.
1 second. Still on the slide. I'm still not on the. 1 second. See where. Anyway, doesn't matter. But anyway, this screen is visible, right?
Yes, yes, it is.
Okay. So for Louis Free has summarized in 3 sentences, the fraudster's greatest liability is the certainty that the fraud is too clever to be detected. And as we say that if we think we are smarter, there is somebody else who's smarter than us, and the question is that how can I be more smarter than what the opposite person thinks he is or she is. So I guess that's the opening remarks, which I feel that the uphill task which all auditors have is the game of smartness. That's the thought which I want to as my starting thought is what I want to leave behind. Just to refresh the definitions of what is a fraud as SA 240 defines, and we know that frauds are also defined by the Reserve Bank of India for the purposes of its consistency of approach in their master circular. But specifically, what does an SA 240 says? An intentional act by one or more individuals among the management and those charged with governance, employees, or third parties involving the use of deception to obtain an unjust or illegal advantage. This is the definition of fraud as far as 240 is concerned. And what are the characteristics of fraud? So while the fraud is a broad-based legal concept for the purposes of the essays, the auditor is concerned with fraud that causes a material misstatement in the financial statements. And as we know that the financial misstatements arise either as a result of fraud or error. Both of them, the misstatement, both of them are not treated as par, while the under the Ind AS framework, whether it is a fraud or an error, the accounting treatment restatement is common. But particularly for SA 240, both fraud and errors do not go hand in hand. They are 2 different branches as far as the material misstatement is concerned. And today we will be looking at fraud as the primary objective. And the distinguishing factor, as we know, between fraud and error is whether the underlying action that results in the misstatement of a financial statement is intentional or unintentional. Anything which is unintentional, which is not designed to deceive, designed to represent something which is not right, is certainly not a fraud, but it would flow in the error. Anything which is an act of design will obviously fall in the fraud category. The point, the SA 240 while it is somewhere in between all the auditing standards. But one of the biggest challenge of this essay is that audit observation which is pointing to fraud, whether at the you are halfway through your audit procedures or you are at the end of the audit procedure, is like this the mountain of cards. You have one and the whole thing will go back and you are made to go back onto the drawing board, because one of the requirements of the auditing standard is that if a fraud has been identified or is suspected, then you are expected to see what is the damage or what are the changes which may happen in relation to the audit work which you have already completed. And so conceptually speaking, it is always a kind of a nightmare for an auditor to find fraud in a financial statements, because it is then all consequential decision making and rework, and finally what is the choices which are available to the auditors comes in. So always remember that while the auditing standard is expecting the auditors to follow a certain methodology, but there is always going to be this unexpected discovery, making you go back onto the drawing board all over again, and then goes all the timelines and the challenges and the next planning which you have done for your next set of client. All of a sudden you may find your team in an extensive rework. And as professionals, this is where one of the aspects needs to be always kept in mind. So if we believe that audit works like a clockwork precision, answer is no. While our all desire is that we start and finish in time, but this is one big variable which is in front of all auditors, and therefore including the planning and strategy will undergo a significant change. If we broadly look at the fraud triangle, right, the framework for spotting what we call the high risk fraud situation, and what are those fraud risk factors? They are events or conditions that indicate, one, an incentive or a pressure to commit fraud, or B, provide an opportunity to commit fraud. And as many a times this question was always asked, and in my initial years back in 1980, the question was asked that why does, if we trust everybody in an organization, why is there really a reason to have a safe or a cash box which is under lock and key? And one of the human psychology which has always been seen, that while you trust, but you also do not give an opportunity or an incentive, or you do not spoil the intention of that person who otherwise has been honest to become dishonest. And therefore they come back and say that there's always a psychology at play, and therefore the factors can be incentive or a pressure. And we all realize that in a high capital market with very high valuation game plans, with a high performance parameters, sometimes the line is crossed, and we all realize that may not be in nature of a fraud, but today you are getting late for a meeting, and sometimes you do break that get into the line onto a zebra. That is essentially even crossing a line, and that is also a pressure of being on time. You may not be a habitual a bad driver, but that's one of the things which is there. So on a fraud triangle, one is a pressure, which is the financial or emotional force pushing towards fraud. By the same breath, there has to be an opportunity, an ability to execute plan without being caught. So as they call that, while you may want to do it, but there also your environment also has to be right, and I'll come to what those environments are about. But you will still need an opportunity to execute it without being caught, and that is always the hist what we see in movies or real life, what we read, everybody comes back and says that while your ATM machines are supposed to be, your fulfillment, video, CCTV camera, you have the armed guards bringing the currency chest, but still the person who's creating that hist is also looking for that opportunity where they believe that they will be able to execute the plan and not get caught. And then finally is what we call is a rationalization, which is the justification of the dishonest actions. So having done it, you are giving a rationality to your action, and a sum total of all these three is something which will result into a fraud. Now somebody may, what comes in first in this triangle is not necessary whether it's a pressure or an opportunity or a rationalization, but effectively it can be to begin with pressure, or it can be with an opportunity, or you have the habit of doing something and then justifying, and therefore, whichever way this fraud as a triangle can get rotated. So let's look at some of the, what have we seen in the public domain, and what does some of the regulators have to say. It is possible, and it is obviously some of these are still subject matters of argument before the higher courts, but nonetheless it is important for us to know that what are the regulators today saying in relation to particularly this standard on auditing. So as we know that you have the quality review boards who has been publishing biannually their findings for last several years, and the latest of the audit quality review of 2021, which was released on 26 October 21, and I would always urge that while we all as practicing chartered accountants believe that we know all the subject, but we also become wiser by also reading and looking at what does the various regulators have to say about their experiences across the various audits which they have done amongst the professional circle. And many a times, some of this additional reading material enables the practicing professionals, our staff, to become little smarter in relation to the I hope my slides are moving. Deepika, is my slides moving?
Yes, it's moving. Yes.
Okay, thank you. So what does the AQR say in 26th October? So they are saying that the following auditors' responsibilities have not been followed properly in relation to 240 by 9% of the audit firm. So which was, they had a sample size of 33, out of which approximately 9% is, and which is a significant number for this size of population. And what are they saying? Documenting performance of audit procedures, including making inquiries of management or those charged with governance. And we know that we have para 44A, 19, A20, because one of the things we must always remember, a regulator on left side has a technical literature which is a guidance to the practicing professional, and then on the right side they have documentary evidences of what you have done, and then they are matching the two. While the argument will always come that, sir, in theory I must do all 100, and the question is whether in reality whether I'm able to achieve 50, 60, 70, 80, 90, 100. Now this mismatch between what is given versus what is performed is what results into the quality review observations. And then comes a question that whether this argument, whether it was it material, whether did any of my steps result into a poor quality audit. Now these are all subject matters of inferences and defense which the auditors will put in, but nonetheless your starting point is that your scorecard is available in front of you based upon the work papers which are produced and which are maintained, right? So as they always say in every standards on auditing webinar which you will or seminar you will attend, work performed not documented is work not done. This is a standard favorite sentence of all presenters in every possible seminar. The second observation is that making inquiries of internal auditor and those charged with governance to determine whether they have knowledge of any actual, suspected, or alleged fraud affecting the entity. Now, you may have, depending upon the size of the entity, you may have a situation where internal audit may not be mandatory, and therefore one comes back and says, so because it is not mandatory, this question of asking the internal auditor does not arise. Then comes the question that if there is no internal auditor, then at least those your management, that is as far as, and somebody will ask this question, nobody, the thief is not going to admit that I have done a thief, right? Or I have not taken away illegally anything. So you will, and that's where, as we move down the line, why are they still saying that these questions of those charged with governance is still being asked? Because those charged with governance is a large body of management, and therefore it is important that this procedure is adopted rigorously and vigorously, right? That was the second observation which they had. And the third observation they had was that obtaining written representation from the management or those charged with governance on the matters as stated in para 39 of SA 240, and also that they have disclosed to the auditor the result of management's assessment of the risk that the financial statements may be materially misstated as a result of fraud. Now, here are the what we call qualitative aspects. So everything is not through a medium of question answer. Some of these are matters of qualitative aspect, that how does the management assess that whether the team who's today responsible for recording, reviewing, estimating, finally producing it in the financial statements, and faithfully representing those financial statements and estimates are right. What is the the representation the auditor has on their record? And I'm sure either there is a representation but which is not covering everything, or it is covering a portion of it, and as far as the QRB is concerned, they are looking at this observation. What does NFRA say, right? I mean, like we may again, as professionals, there may be a kind of whatever we are reading in terms of the public statements. We leave that aside for a minute for our purpose. What is here in terms of their September 21 audit quality review report? So first observation amongst the various, it's a very large document, but significantly around 240. What it says is that the audit firm did not discuss susceptibility of the financial statement to material statement misstatement due to fraud, and did not identify and assess revenue recognition and management override of controls as presumed fraud risk. Now, there may be a difference of opinion, because normally revenue recognition and your fixed assets capitalization, these are the two matters which generally are always on the top of the list of every auditor. But maybe based on the overall review of the papers and inputs, they've still come up with this observation. There is no discussion on understanding the entity to perform risk assessment procedures to identify and assess fraud risk, significant risk, and other risk at financial level and assertion level. Now, this is something similar to what we saw in the earlier slide as well, which is your para 27. And the third part, it says that the auditor has not only failed to identify revenue and management override as a fraud risk as required by 315 and 240, because as I was saying that 240 is only one essay, right? Because it has got connected changes on to the various other standards on auditing, but also to document responses to the assessed risk as required by SA 330 and reasons for rebuttal of fraud risk as required by SA 240. So as you have seen that the implication of the essay which we are deliberating this evening is not only restricted to 240, but it goes to 315, it goes to 330 as well, and therefore, and 315 as well. So the knowledge of the team on the standards on auditing is something which has to be such large that you can't really come back and say this is not like your accounting standard, that when I'm looking at Ind AS 115, I will look at it Ind AS 115, and maybe the other standards will be only to the limited extent. But in an essay, the requirement is to understand all standards on auditing, because they are all nothing else but part of a larger like it's like a Rubik cube, right? You try and match one and the other color will surface. That's how the standards are. Now let's look at it interestingly. These are the two we saw from India. Now let's look at what is happening on an international front. And today we have the Security and Exchange Commission of USA. And let's say what is the modus operandi they are adopting to uncover financial statement fraud. So the SSC has what they call an audit quality model, referred to as the RoboCop. And the reason why they're using RoboCop is because, as we would have seen, that they must be using a lot of robotic processes or the AI, ML intelligence tool around the the large data analytics, as we will call, and therefore they have smartly called this as a RoboCop that analyzes financial statements within 24 hours of it being submitted to identify potential fraud. So you can imagine that every SEC filing which is happening must be subjected to such extensive AI through a document, pulling up something which is metadata in the universe within their filing, that they are able to work probably at the speed of lightning, obviously with the help of the entire robotic processes, to identify whether are they able to say potential fraud and what are they trying to look for. So not only are they analyzing the actual numbers, but they're analyzing the text to look for particular phrases, keywords, or linguistic elements used by bad actors to confuse readers on a complex issues. So many a times, people or readers or many people think that financial statements versus what is all about numerical number. Answer is not about numerical number. About the point is whether what is there in your MDA sections, what is there in your corporate governance section, what is in your director's report, what is in your notes to accounts, what is there in your additional information, what is it that is in your for the listed entities when they hold the investors call, what are they putting up onto the investors call in terms of the various information, and because even though while it must be as a kind of a voice call, but that voice call is getting converted into a speech and they're putting everything together, right? So that's another level of what they're trying to look for, the inconsistency between the entire financial statement. And they have built this analysis based on prior fraudulent filers. So with each new fraudulent filing, the analysis will become more accurate. So the whole objective of this RoboCop is to, as they call, self-learning. So they are improvising their own techniques as they move forward. So very interesting point for us to also see that it is not something which they are holding in a far distance where everybody would have forgotten, but they are doing on a most real-time basis. What does the RBI report, again coming back to India, what does the RBI annual report in 2021 they have to say? So they are saying that the number of frauds reported in 2021 dropped by 15% in number terms and 25% in terms of value vis-a-vis 1920. Now that's a good part, but the frauds have been occurring predominantly in the loan portfolio category, which is your advances given. The average time lag between the date of occurrence of frauds and the date of detection was 23 months for frauds reported in 2021 for frauds below 100 crores and 57 months for 100 crore plus fraud. So you can imagine you're talking 2 years to almost 5 years. Now look at this vis-a-vis the earlier slide where they are trying to improvise faster, but this is where the how much time lag is there, and we can imagine that how as auditors we are always on a tenter hook, that whether that fraud is getting surfaced or you are able to identify during the course of your audit, or it will not get captured and it will surface in a subsequent year. And then those consequences is something which all of us as practicing professionals are aware of. What they are further saying is that the introduction of dedicated market intelligence unit for frauds and implementation of automated unique system generated number for each fraud. So this is their their way of understanding what is happening in terms of the market intelligence. What does IFAC? We all have gone through the two audit period. We obviously under COVID we did March 20, and to some extent even March 21 was under the COVID period. And IFAC specifically, the Federation of Auditing, they have, what have they said in relation to audit consideration due to COVID? And for ISA 240, they are specifically saying requires the auditor to make inquiries of management and others within the entity as appropriate to determine whether they have knowledge of any actual suspected or alleged fraud affecting the entity. This is a requirement. Now, if the auditor is unable to conduct fraud interviews in person, and as we know that a lot of work has happened, work from home or on a remote basis, which meant that you were not meeting eye to in person, and that's what they are trying to pick up in particularly in person due to COVID-19. These inquiries could be done utilizing technology such as video conferencing. So as we know that even if you did not do a physical stock count because you could not attach, but the factory was on, you still used mobile devices or video devices to look at the stock where they were, while on contemporary basis, while they were doing the stock count, you are also examining as if you were in person, right? So those are a lot of guidance notes were given around that, and in absence of that, it will indicate that the procedures was not designed sufficiently, that whether absence of such procedure whether could have resulted into a material misstatement as a result of fraud. So the implications of absence of such steps will point a finger to a different direction, and this may be preferred to only telephone conversation because auditors can still see management's body language, right? So as they say that only a telephonic interview, while you can hear the voice of the opposite person, but you can't still see the body language, and you can't really look into the eyes of the your auditee, and sometimes that's what also makes a big difference, and that's what IFAC has mentioned about the audit consideration. So moving forward, let's quickly see some of the illustrations from published accounts under the CARO reporting, where some of the companies have, what have they spoken about the fraud, not necessarily in relation to whether that has resulted into a material misstatement. The whole idea is not in this illustration to talk about whether that itself was a material misstatement or not, but essentially to give some flavor of the nature of fraud which the auditors under the CARO section on the fraud on the company or by the company has reported. So MMN in March 20 reported that as they have said that we have neither come across, and I'm not reading the earlier sentence because those are the standard languages, any instances of fraud by the company or any material instances of fraud on the company by its officers. So sometimes it may come into a situation that whether in a fraud accounting, whether materiality comes into play or does not come into play, but for this is one which I thought I will bring to your notice. Supreme Industries in March 21, they have specifically mentioned about the CARO and the disclosure in the notes in relation to a fraud. So that they are saying instant fraud by way of embezzlement by an employee during the year under review involving an amount of 40 lakhs at its manufacturing unit in Noida. The company has taken all requisite steps and an amount of 31 lakhs has been recovered, 5 lakhs is under process of recovery, and 4 lakhs has been provided for. Now here they are obviously not mentioning the nature of the fraud, but nonetheless, this was an item which has been reported in relation to one of the manufacturing unit. If you look at another NBFC company, so here the disclosure in notes is that during the year, frauds committed by employees and customers of the company, and mind you, here they're using both, because many a times it is a collusion between employees and customers. Sometimes it is not a collusion between employee, but the customers have misrepresented all the documents which was supposed to be faithfully represented, right? So this is not necessarily that both of them have acted in collusion. Of the company amounted to 2.5 crores, and this was continuing even in the earlier year, which the amount was 3.8 crores, which has been recovered or written off or provided for. Now here obviously what was recovered or written off or provided for, that's not the breakup which they have given, but nonetheless that's the amount. And of this they have said that what was a fraud by the employees, that amounted to almost 2.3 crores, so which was almost 23 on 25, so which is virtually 90%, and the similarly 33 on 38 is also almost 85-90%, right? And as far as the reporting on the fraud is concerned, they are obviously the customers are not part of the CARO, but they have therefore restricted in relation to what was the fraud created by the employees. Now these are why I'm sharing this information, is that some of this in overall size may be insignificant, but the fact of the matter is that it does exist, and it can achieve a disproportionate volume, resulting into a fraud and material misstatement of the financial statements. Similarly, in terms of the further another NBFCs, so they have again spoken about the fact that what was the fraud. So fraud on the company by the officers and employees were gold loan related misappropriation, cash embezzlement, or burglaries. Right now, as we know that today, if the gold has been deposited with the company, and some of them may be lying in the vault of the company, some of them may be lying in the third party vault. Nonetheless, it all gives an opportunity that on one hand you have given the loan, by the second hand you have opened up your safe or the internal control over the safe custody, resulting into the primary security against which you have lent, that also being stolen. So misappropriation, cash embezzlement, burglaries of the various amount of almost 14 crores, which was 7 crores, so almost twice the number compared to the earlier year, of which they have recovered only around about 15%, and in the earlier year, so it was even less than 1%. Now here the company has taken insurance cover for such losses and has filed insurance claims in this regard. Now the fact is that that's a mitigation of your risk, but the reality is that fraud did occur, and then the company is in the action, taking actions to recover this money, and plus whatever for non-recovery, which is the provision which is being made. So these were the aspects which we saw in CARO and in terms of the our notes to accounts, and under the key audit matters. So what are the potential fraud and misappropriation risks which were reported? So in some cases, it was reported about the revenue overstated to achieve performance targets, because this was one of the significant key audit matter which the auditor felt was required to be validated, so that the financial statements and the both the recognition, the measurement, and disclosure of the revenue was in consonance with the accounting standard, right? So that was the performance. So here must be an industry in which your bonuses are linked to the revenue, your commissions are related to revenue targets, and therefore the very large variable of the earnings, when they come from a very high performance target, there is always this that you are expected to achieve 100. If you achieve 90, then you get nothing. Maybe between 90 to 100 you may earning something. Now if you are at 85, 88, 89, that 1% or 2% is, if you remember from the triangle, that you will will push the envelope to come back and say, oh, let this 89 become 91. And therefore one of the revenue as a result of performance target was seen to be a CAM, and what are the alternative audit procedures the auditor has performed to address this concern. And also there was a case where they have said the risk of material misstatement arising from technology, and as we know that the technology is something which, whether everything is integrated, whether the technology has a different authorization metrics, whether there are robust passwords, whether are you capable of altering the what is already recorded without leaving an audit trail by the tables on the physical tables, which at the back end one opens and overwrites the number, so you don't even get an audit trail, right? So there may be various reasons of deployment of technology in the course of the business, either for the business transaction or for recording of the business transaction. But the technology was still seen to be a kind of major challenge, resulting into material misstatement likelihood. And as we know that the digital world is exploding even at a very, very fast pace, and therefore this was another dimension. And what are the other areas which are susceptible to fraud? Quickly, obviously the cyber crimes, the phishing, and the data breach. Every other day we are reading from the various advisories which are coming from the Reserve Bank of India and the our police department, where on the cyber crime they are coming and saying that the vendors emails gets generated that I've changed my bank account and now kindly substitute my bank account with what I have given, and the gullible manager or the person at the your auditee level undergoes the changes of the bank RTGS details, and all of a sudden you find that that was a fraud onto the company, where it was a fraudster who masked the email ID which purportedly came from WRC but technically did not come from WRC. Or you have the stores and purchases entered by the same personnel, which is low value but high volume. Now these are sometimes because of the shortage of hands, many a times you find that the you compromise on the maker checker. Similarly, on vendor quotations from relative of the employees or dummy parties. Now these are obviously some of the known factors where the quality of quotations are so if in many cases the good internal auditor will probably call up the that mobile number or the number which has been given, and then realize that either that number is non-existent at all. But all those who understand that this is a standard procedure will at least have some number which is valid. Now, not necessarily the one which is of the party. Now there are, you can only do some cross check in terms of the alternative evidences, but these are all realities of life. And then you obviously have the corporate espionage, the leakage of the confidential information, and we know in many cases, which is part of the public domain, that the entire customer list was something which was taken over, and these are substantial fraud onto the company. Now that may be one way of the fraud. and the purchases and sales are inflated for banking limits, and one of the reasons why the CARO 2020 was amended also for the purpose of saying whether your stock quantity as per books of accounts versus what has been submitted to the banks, whether they are matching or not matching, as we know that this is the requirement beginning April 21. But these are some of the reasons why the because I need a banking limit, that is the one of the incentive for the management to create a have a fraud which is resulting into your material misstatement. And then obviously the related party transaction is something which all of us are reading. We are already reading how much changes even SEBI is willing to bring in relation to the related party transactions and its validations, and they believe that related party transaction is a hotbed for the purposes of material misstatement. So these are all under a very high microscope, and therefore each of these items, when they are not adequately covered in your working paper documentation, you will find that while you have done everything, but your audit documentation will not show that you have necessarily performed the steps which you are expected to perform. So this was quickly in relation to what were observed, and I thought we'll make this session little more interesting before getting into the technical aspects of some of the slides, and an overview is complete unless the technical literature also is quickly reviewed. So we'll see about the SA 240 and the Auditors Responsibility under Companies Act 2013. Now, as we know that 240 talks about the entire essay deals with the type of misstatements, the objectives of auditor with respect to material, with respect to misstatement of financial information, the professional skepticism. Now, this is something which has always remained with us, that we don't want to take truth at face value, and therefore many a times we want to validate everything. Even if somebody gives us a 2,000 rupee note, we still want to validate whether the 2,000 rupees is really a genuine note or it's a fake note, and we believe that we are able to decipher between the two. But the fact of the matter is that the skepticism is something which is part and parcel of our auditor's life. Obviously, it talks about the internal control because that's an area which is very, very important, because it's also a kind of a strong foundation on which the you can also, because a robust internal control which is validated also to a very great extent helps in identifying or sometimes avoiding the possibility, as we saw earlier, right, that you should also be capable of being executing it. But if there is a strong internal control organization, then the maker checker, the ecosystem will probably not permit that crevice to creep in. And and I'm reminded of the SEC commissioner who back maybe some 10, 12 years or maybe a little more. I'm like, even then he came back and said that the one way to focus increased attention in the critical area of internal controls is the commitment to quality and good internal control, and that may be the best use of professionals' times and talent, preventing problems before they occur. And that is what we always are trying to look for, a strong internal control environment. Then obviously there is consideration specific to smaller and new age entities. I have a slide around the new age entities because those new age entities will throw a newer set of challenge, because the method of doing business, the nature of industries, the size of industries, the speed of business transactions, the reduction of the number of people, the extensive use of technology, all of them, contributes to a great relearning and reskilling, as we call. So there's a slide on that. I have a slide also on a charitable organization, which I felt was important because, as you would have read, that the social stock exchange is something which SEBI in principle has cleared, and therefore so far charitable institutions were receiving donations and were spending the money received for the purpose for which the donation was given. But now they will also be accessing the capital market, where more and more charitable institutions will be able to reach out, and therefore the level of assurance which is required to be given to the capital market will increase also substantially. So some thoughts around because even in charitable institutions, somebody may come back and say, why would there be a fraud? There can be a fraud because if the money was supposed to be spent on a particular objective for a particular location and with a particular outcome, and if it was not spent in accordance with the desired direction of the donor, but your documents were so created to fulfill that desire or that instruction, then what else if it is not a material misstatement? Because you have actually not spent it for the purpose for which it was intended to be spent, and therefore while your donation may be right, but your spend side is wrong. And then obviously you have the overview of the requirement of 143.12, then the requirement under CARO, some of the risk assessment procedures, your responses, evaluation of the audit evidence, what happens when the auditor is unable to continue the engagement, and then obviously lastly, as we come back and say that finally everything boils down to the documentation. Like in a marketing parlance, they may come back and say, however good is the product, but if the packaging is wrong, the product is treated to be defective, and the audit is nothing else but finally whether what is the confidence which you are able to demonstrate of your work done through the documentation. So let's quickly look at the type of misstatement. You have fraudulent financial reporting and you have misappropriation of assets, and the subsets can be manipulation, which can be through the including forgery, misrepresentation, or intentional omission. I knew something but I choose to keep quiet, or and sometimes they say that the silence is where sometimes the key also is, because they are not fully so while they say that I don't want to tell the truth, or rather I will not tell a lie, but I will not speak either, right? So that's what we call the intentional omission. And then the intentional misrepresentation of accounting policies, that because we are not able to do 100% of the audit, while now obviously because of the AI and machine language, lot of database is subjected to on an ongoing basis to a very large level. We saw the Robocop, right? What it is doing is subjecting virtually every word of a document or every letter of the financial statements. It is subjecting to a very high degree of review, and I'm sure that is what is also increasingly happening, that the technology aided tools is obviously increasing the level of volume, but the smartness also lies that whether is it being applied correctly, because you may process very large data, but if you don't process it right, it's garbage in, garbage out. So about the so that could be one, fraudulent financial reporting. And on the misappropriation of assets, it could be misappropriation of goods or defalcation of cash. Now, while somebody may come back and say that in the digital economy, where increasingly there is limited cash, but as we still know that even at this level, our cash to GDP is still in a double digit. We are almost close to 12-13% or 14% of the GDP is still in physical cash. But whether it is physical cash or it is digital cash, it can still defalcation. We saw that in relation to the phishing activity, it can still happen. What you are sending the money to X with the bank account number Y, and the your books shows Sandeep Shah's account X and my name, but in reality what is going is to somebody else. So there is also a digital defalcation where uh, apparently on paper and on documentary evidence on the RTGS forms you may find that the account number matches, but in reality the money has gone to somebody else. And then obviously you have the misappropriation of goods. It can be tolerating shortages, it can be tolerating poor quality, it can giving more goods than what they have paid for. So misappropriation of goods, assets can be of various kind and nature, right? So what is the objective of the auditor with respect to financial misstatements? So the starting point obviously is to identify and assess the risk of material misstatement due to fraud. Now that's your starting point. If that be your left side, then what are you expected to do? You are expected to obtain sufficient and appropriate audited evidence. Now this word appropriate and sufficient is always going to be subjective to the size, scale, complexities, the structure, the nature of industry. So what you believe is appropriate audit evidence, somebody may come back and say this is not appropriate, and therefore your documentation must say that whatever your sampling techniques, your methodologies which you are deploying through the verification, internal control, internal auditors, everything was appropriate and sufficient to obtain the audit evidence that these financial statements are free from material misstatement. And then comes the question that having done this, you have to respond appropriately to identified or suspected fraud. Now, and therefore, as we say that only being aware is not good enough. You have the key, but that key must also be applied to the wrong law, to the correct lock. If you have the key, which is your knowledge and your understanding, but if you are applying the key to a wrong lock, then you are not appropriately responding to the identified or suspected fraud. I mean, like contextually speaking, that is how I would like to put this as an objective. Obviously, what does professional skepticism? We all know it's an attitude that includes a questioning mind. I mean, like we always know that Sherlock Holmes and everybody came back with a very, very questioning, inquisitive mind, where that's a trait of auditors, that you are always questioning. And the challenge for us is that when we go home and when we start questioning, then the true color of the auditors comes in. The critical assessment of audit evidence is this, that's always another coin of the professional skepticism, that you don't take things at face value. Being alert of conditions which may indicate possible misstatement due to fraud or error, and this alertness is coming through various means: your own knowledge, your discussion with your team members, your discussion with these various auditing clients. So there are various, sometimes the external reading, sometimes the knowledge of the what is happening in the other industry. Each of these are what they call are your the ringing bell. Investigate the inconsistent responses from the management related to inquiries, and here is where the smartness comes in, that what they give you as a reply yesterday or day before or during the course of your beginning of the audit, what reply they gave to your team members, and everybody's smart. If they've given reply X to you, and on the same area, if Y is going and Y was not present, they will twist the answer. But if you were the same person, it is your notes, your internal capturing of the answers, which is going to come back and say that between first period and the second period there is an inconsistency, right? So this is both, it's a both ability to recollect, ability to from your documentation to be able to pick up the inconsistency, and then obviously the 315, as we saw earlier, which covers the auditor's response to assessed risk, requires discussion amongst the engagement team members and the engagement partner on those matters which are communicated to other team members not involved in the discussion. So this is, so therefore it is important that there are people who are in the system and are aware of the fact that knowledge or information received by one team member is also available to the other. What are your further responsibilities? Which is to say, obtain reasonable assurance that the financial statements are free from material misstatement. That is your primary responsibility. Risk of non-detection of management fraud is greater than of employee fraud. Now as we know that those who are at the highest level, their ability to influence is much greater than that of the employee. But nonetheless, it is not necessary that fraud is always as a result of the top. It can also happen at the other than the management, which is your employee, because all put together is recording or taking steps eventually to produce a wrong financial statement. So that is another part. Maintain the professional skepticism throughout the audit, and the risk of non-detection of fraudulent material misstatement is higher than the misstatement due to error. Now these are all the risk, these are what we call overpowering things which we must know. And the auditor is responsible for prevention and detection of fraud. I think this has been a matter of big debate between the regulators' expectations, that of the stakeholders, and what we have, whether we are a bloodhound, we are not a bloodhound, and the changing patterns and changing expectations of the stakeholders, the capital market, the regulators. I mean, this is something which is a disconnect, that while we believe that we are not responsible for prevention and detection of fraud, because primary responsibility is that of those who are in management. I mean, there is undoubtedly, you are not a gatekeeper of their control environment. You are there only to validate, but you are not there to be their gatekeeper. But as we speak and as we defend ourselves, but the reality also is something which we cannot be, we have to be mindful of, because there is a lot of expectation mismatch there. And therefore the management should take all necessary steps for fraud prevention and deterrence through implementing policies and controls will include internal control. And as I have said, that the internal control are basically a commitment to quality, and good internal controls at the highest level of an organization may avoid financial problems. And some of the reasons why you should focus also on internal control is, one is to protect yourself against unscrupulous conduct of employees, because it is expected to look at a control on a regular basis to prevent and detect problems before they can hurt. Because as we say that conduct of employees, as we know that if there was no biometric and if it was only merely a kind of a smart card, one employee swiping, going in again, coming out and swiping again, and everybody getting an attendance. But if you had a good internal control, it would have ensured that the number of employees whose attendance is counted was there for the period for which it was expected to be there. And now as we speak about the new age technology from this work from home, now whether with video off, whether that employee is there or there is somebody else or not there, those are going to be another set of challenges. And third is because poor internal controls can lead to misleading financial statements. I think the cause and effect relationship is something which is very, very well understood. And just to say that if it has to be an effective internal controls, they are obviously supported at the top of the organization, point at the top of it, right? Because I swear by, as a management, that I would like to have a good internal control. So it is supported by me. Two, it is reflected in the structure, functions, and risk of the organization. One is a commitment, but that commitment also has to be followed by action, right? So the second part is that it is, therefore, if it has to be a good internal control, then it will be reflected in the structure, the function which is your maker and checker and division and the risk of the organization. The third, it will be delegated effectively, because today if you do not delegate, then that internal control is only on a wish list. Fourth, it is codified in writing, right? So as they say that all good shastras are always codified, right? And therefore it is something which is not only a kind of a verbal statement, but something which is put in black and white and which is circulated and which is always used as a reference point. Fourth or the fifth, it is checked periodically, as we have seen that with changing environment, whether my internal control needs to be altered, reviewed, changed. COVID had a different internal control. So fifth, it is codified, it is checked periodically. And last and important is that it is enforced, because finally what is important, that everything is nice, but if it is not enforced, then it is still a desire. And so therefore that's where they say that all accountants, their auditors we have to put renewed focus and emphasis on the existence and effectiveness of the internal control. So some of the consideration for smaller entities is basically a manual control, no segregation of duties, it is promoter driven, obviously no SOPs, because everything is in my brain. I'm the one who's the harta karta of my organization, so I really don't need a standard operating procedures. And obviously the ERP controls are obviously weak because the size of the organization. Maybe something which will use maybe a package which is capable of being altered or being changed, or sometimes it's a cost consideration. So while it may not be bought with a reference for convenience, but it is also a function of the cost versus the size of the business, right? So these are the areas which obviously SA 240 has a particular paragraph on 240 as to how does the auditor in a situation like this still adopt its responsibilities. And therefore some of these are very clearly that what should be really a reason for an entrepreneur of a small size entities to create falsified financial statements. It can be both ways. It can be in some cases because I have a desire to grow, so therefore I'm showing a larger revenue and a larger asset. If I don't have a desire to grow, I need more loans, again I will do that. If I don't have a desire to grow, nor do I have a desire to raise money, then maybe my tax consideration can be one of the reasons for the purposes of financial misstatement. Or it is possible that I don't want to share the profits with my extended family members, because there is a joint sharing and I'm in management, can be because of that. So you can have multiple reasons why even in a smaller entity a fraud may arise. And therefore it is so important for auditors of a small size entity also to understand the management, the structures, the stakeholders, the growth, the medium of financing. So many parameters are available for you to look at for the purposes of your audit steps. Obviously I had mentioned about the one slide on the new age entrepreneurs and the new business models, and we know that the crypto exchanges, the edtech businesses, the fintech businesses, the e-commerce businesses, the food tech businesses, or even your delivery methods like your the transport, as they call the Olas and Oyas and the Dream 11, the those who are managing your IPLs. And so each of these businesses, they come with a very different business model, right? They are all technology, digitally savvy. There are no physical infrastructures. You can go and visit a plant, but how do you have whether am I delivering the lectures to the student and whether my revenue recognition is correct or not, or whether am I just repeating a recorded lecture which technically meant that I had to be physically available, right? So take an example that in WRC, if Mr. Sandeep Shah as a speaker had already recorded and presented this, only at a time of question answer, maybe I may come in. Now, these are all new technology related challenges which will happen, and therefore the recognition measurement criteria and the, whether your obligations have been delivered or not. So many new challenges will come up, and their digital industry is snowballing in size, getting tough to ignore. I mean, like, whether we like it or we don't like it, some of these are here to stay and here to grow and here to disrupt a lot of businesses, and therefore the knowledge of such businesses and its auditing procedures and the manner and our own skilling up the knowledge of ourselves and our team members is going to be critical. Your FM says that the new age industries will be catalyst and will make a big change to global economy as a whole. So that's your FM's desire. I'm sure the country also is aiming to do that. And auditors of such entities needs to customize their audit strategy, audit procedures, and risk analytical procedures for such kind of industries or business, because while they all are painted under the tech business, but each of those businesses have a very, very different challenges and different mechanism of audit and risk assessment around the material misstatement as a result of fraud. I did mention about the fact that you will have a social stock exchange maybe in 2022 is what the desire is. Obviously, you will have the monitoring agencies, you will have one-off or recurring transactions, the fund utilizations, maybe a thought will happen, UDIN for a donation receipt, a role of CSR committee, the related parties. So, because what happens is generally everybody believes that a charitable institution is set up for the purposes of serving the needy, and therefore one will always come back and say that why should that result into a kind of a fraud. But the stakeholders are looking for a positive assertion, and you can give positive assertion only provided you have deployed SA 242 core. Just quickly on 143.12, it talks about that all frauds against the company by its officers or employees to be reported by the auditors to the board or audit committee in 2 days. If it is in excess of 1 crore, then the company to respond to auditors within 45 days, and then the auditors to report to central government within 15 days from the end of 45 days, irrespective whether reply is received or not. And if it is less than 1 crore, then company to report each fraud details in the board report. This is what your 143.12 tells you. Your CARO 22 talks about the fraud committed by the company or committed on the company, and it needs to disclose the nature and amount of fraud in both the above cases. We saw in the earlier regime where it was not necessary to disclose the nature. Now the disclosure of the nature is something which is going to be mandated. And then obviously you have under 143.12, which has been filed by the auditors in ADT 4 with the central government, and further suspected frauds are not required to be reported under CARO. That is a given statement that your suspect is not fraud. And obviously another major aspect is going to be that you have considered the complaints received by the whistleblowers, right? So I mean, this is another aspect which obviously in the audit committee and for listed entities, this is something there, but in a private organization, by and large, you don't really have a formal whistleblower or mechanism to receive. Quickly, in terms of the risk assessment procedures, which is to obtain information which is used for identification, and what shall the auditors do? Inquire the management about the controls and oversights, in specifically assessment of risk to financials due to fraud, which is your nature, extent, and frequency of such assessment. Because you can't be doing only throughout the year and come back and say that the management is doing the assessment only at the year end or when the audit is about to begin. No, because this is something which has to be across the period, as we saw in internal control, that it is something which is on a consistent basis, which is functioning. The second part is process of identifying and responding to risk of fraud, including fraud already identified, as we saw the pack of cards. Communication to those charged with governance for identifying and responding to risk of fraud. Now, this is something which, if this step is not taken, then you have not completed your SA 240, because it is not something to be kept to yourself. A fraud is supposed to be asked, validated, and then the consequential steps have to be taken. And then communication to employees regarding its view on business practice and ethical behavior. Further, you inquire with the management, internal audit team, and those charged with governments whether any instances of actual or alleged fraud has occurred in the past and obtain their respective views on the risk of the fraud. Consider whether any information obtained indicates a risk of fraud, and then you evaluate fraud risk factors from the information obtained from the assessment, and then identify unusual or unexpected relationship while performing analytical procedures, and then evaluate them to assess the risk of material misstatement. As far as the auditor's response is concerned, in terms of SS 330, we know the auditor to determine overall responses to address assess risk through assign and supervise the personnel taking significant engagement responsibilities. So as we know that the strength of the chain lies in its weakest link. So in our audit team, it has to be important to understand that your personnel, your audit team members, they come with different experience, knowledge. Some of them are in the course of training, some of them are in the process of honing their skills. So it is important that you not only assign but you supervise, and who has a critical significant responsibility, something which is monitored even little more closely. Evaluate the accounting policies to be indicative of fraudulent financial reporting. Incorporate audit procedures to be executed to include an element of unpredictability. I have my closing remarks on the thoughts on that as well, because you cannot be always predictable. And then obviously while controls are there, but if I have the master key, then I have the ability to override the controls as well. Now these are obviously matters which has to be constantly be reviewed, and then to the override, you look at in order what are the controls to mitigate the risk of management override of controls. Auditors to design and perform the following audit procedures, because a good audit committee will also ensure that even while some portion would like to commit a fraud, but the balancing act will not permit it to go through. So you test the appropriateness of journal entries. Some of these are already part of the essay. Review the accounting estimates, one of the most important aspect, because today your whether it is in fair value, whether it is in your return of goods, whether it is in your supply cost, whether it is in terms of your useful life of the asset, every financial statement is about estimates, and therefore how those estimates are reliable is going to define whether your financial statements are going to be free from material misstatement or not. And then obviously look at unusual transactions and then perform further audit procedures based upon whatever you have seen. And then obviously you have the evaluation of the audit evidence, which is indicative of previously unrecognized risk, material misstatement due to fraud, or indicative of fraud. And if case of fraudulent misstatement where auditor believes management is involved, then you reevaluate the response to the assessed risk. And if you eventually are unable to conclude that the financials are fraudulently misstated, then the auditor to evaluate the implications for the audit, and that may result into your giving up the audit as well, or whether will you continue to perform the audit or not, and you will then withdraw from the audit if appropriate and report to the persons who made the audit appointment. So these are what we call consequential outcome of the fraud. And if you're unable to continue the engagement, then bring into the question the auditor's ability to continue the performing. The auditor shall determine the professional and legal responsibilities applicable in such circumstances, consider whether it is appropriate to withdraw from the engagement, where withdrawal from the engagement is legally permitted. As we know that today SEBI's mandate is very clear that if you have completed the Q3 or Q4, then you have no choice but to complete your audit of the annual accounts. You cannot withdraw from the final account. So so there are certain prohibitions as far as the listed entities are concerned. And if the entity withdraws, then you discuss with the appropriate level of management the reasons for withdrawal, and then determine whether there is a professional legal requirement to report to the person or persons who made their audit appointment. And for instance, as we know, this is in the public domain that they had written and filed with SEBI to say that the company was threatened with the legal proceedings, including civil or criminal, and then in the event we proceed to discharge our duties as prescribed by law, such actions create an intimidation threat for us and prevent us from performing our duties as statutory auditors of the company and resulting into their withdrawing from the engagement. This is in a public domain. Finally, the documentation, which is your 315, obviously the decisions read during the discussion among the engagement team regarding susceptibility of fraud, and identified and assessed risk of material misstatement due to fraud. So whichever manner in which the hand notes are done, even if somebody is not willing to make notes in writing, then you record the conversation so that it becomes aid, and then you convert that into your documentation through a proper notes. I mean, there can be multiple ways of achieving this minutes. And then you have 330, which is the response to the assessed risk of material misstatement, which is the overall response to the assessed risk at the financial statement level, and the linkage of those procedures with material misstatement due to fraud at the assertion level, and the results of the audit procedures, including those designed to address the risk of material management override of controls. I mean, that is your 315 and 330 for you. So finally, if I was to, in my last two slides, if I was to summarize it, it means vigilant. So like if we have a pet dog, we always like the dog to remain vigilant, right? Not be in a very familiar environment and come back and say that, look, I will the pet will not do its job, right? So that's vigilance. Obviously assertion, because it's not just about a checkbox. Obviously IT control and system audits and internal controls is something which is of a paramount importance. Site visit for audit, because what a site will tell you, whether it is in a restaurant, it will tell you whether it's a 20-seater, 40-seater, it will tell you turnaround time, it will give you indicators that whether whether what size of the kitchen, so plant capacity, so many benefits are available as a result of the site audit visit. And we have always believed that the physical asset, physical visit is something which gives you much deeper insight. Now this juxtaposed with my digital company, you have a different issue, but not everything is digital, right? Because there are some elements of deliveries which are happening physically. And then finally the documentation, remember, work done not documented, work not done. My closing remark is unpredictability in audit procedures. Every good bowler who throws a googly is the one who's able to get the best of the batsmen out. And that is so true in our audit, because when you have a continuing engagement, they exactly know what your procedures are, what your team members are going to ask, what is your internal checklist, what is the next step to a question which you are going to ask. And the question is that whether are we that bowler who throws a googly, and that in the course of throwing that googly, we are able to capture what we are wanting to capture. And this is my closing thoughts for this presentation. And thank you so much for listening. And I'm happy that I've been able to complete my. I may have been little fast, but I have tried to complete within the allocated time, because I know we are just about to hit the dinner time. Thank you so much, Deepika, and I'm happy to take any questions. And this presentation will be made available for it to be circulated. Thank you so much.
Thank you so much, sir, for your session. It was really worth taking our time on a Friday evening and listening to you, because as we all know, like, frauds these days are very easy, and we get people who are more smarter than us, and we might not catch things which might go wrong for us. So I thank on behalf of WRC for sparing your time and enlightening us on this topic. Thank you so much, sir. And thank you to all the members who have joined our session. Thank you.
Thank you.
Is there any question?